corn's April rally looked unstoppable until reality stepped in. Today, let's look at why the bounce faded, why the balance of evidence is bearish, and which market metrics pro traders are watching. In early April, corn prices jumped on fresh tariffs, front-loaded US exports, a softer dollar, and tight domestic stocks. By mid-April, though, that story had reversed. Ideal US planting weather, better South American supply prospects, and rising trade friction with China pushed prices lower. So, what are the fundamentals pointing to? 62% of the US corn crop was in the ground by the 11th of May. That's ahead of both last year and the 5-year pace. Much of the corn belt in the US is running ahead of average, although Ohio, a key corn producer, is lagging. In South America too, Brazil and Argentina lifted production estimates, adding export competition to global stocks. Bottom line, more supply, less urgency. Do technicals back that view? Well, a death cross appeared on the 1st of May when the 9-day moving average slipped below the 21-day moving average. This suggested near-term downside, which is exactly what was observed in the following days. SAP. RSI hovers just above oversold and below its average, suggesting that although the downward momentum is strong, there is a risk of a technical rebound. MACD keeps falling, showing strong and sustained bearish momentum. What are the professional traders doing? Managed money net long positions fell by 80% in the week ending 29th of April. Asset managers have cut back net long positioning, almost entirely suggesting their sentiment towards corn prices is turning pessimistic again. Implied volatility stayed calm until prices cracked, then it spiked sharply. On the other hand, skew is now at its highest level this year, pointing to rising demand for calls and may signal early risks of a rebound. Overall, the crowd is leaning negative. So, in summary, the evidence, ample supply, bearish momentum, and defensive positioning supports a lower price path into early summer. At the same time, risks are arising as corn RSI reaches close to oversold levels and MACD starts to level off. Additionally, elevated skew may signal rising expectations of a rebound. Professionals who share this outlook often take light short exposure in near-term corn futures or options. Sizing positions for modest risk while watching key resistance levels is crucial. April's spike is history. Weather, supply, and sentiment line up against higher corn prices. Thanks for watching, and click the link on the screen to read the full article.